Hello everyone, how's it going? In this video, we're going to talk about Lucid trading under the ticker symbol LCID. It has been one of the most speculated stocks in the Nasdaq. Some have said that it could be the next Tesla, while others believe that it's just going to be a giant bubble about to burst. Lucid is one of the few companies that has an actual product rolled out. And as time went on, the stock price action, along with investors' hope, went through a lot of roller coasters, and some are still wondering if this is a bandwagon that they want to hop on. In this video, we're going to look at Lucid and to see if the stock still deserves to have a place in our portfolio. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description section, as every help is greatly appreciated. So over the past few days, the speculation around Lucid has been rampant, and for good reason as well. There have been persistent rumors, probably founded by the way, but there have been persistent rumors saying that the stock is up for sale and that a sovereign fund wants to purchase it. Now, I personally think that this is why the volatility has definitely picked up recently and on the uptick as well. So let's talk about this whole situation, and also I would like to address some of the concerns that an analyst from Morgan Stanley has issued. So I think that this situation is very interesting, especially for people who have been in below like $10, and for those who have been in over the past few months, then I would say that it's a good time to offload right now, to be honest, because for you, there's actually something to lose, the potential unrealized gain. For somebody like me, my cost basis for my Lucid position, although a very small position, is around $35. And for me, I don't necessarily have any sort of pressure to go, right? And also, I personally don't think that the premium, whatever premium there might be, of this buyout, I'm not sure that it's going to cover all my losses, because I have to say, like, the initial entry point has been my only position so far. I haven't really added my position. I haven't really increased my exposure to Lucid ever since. But for people who are, for people whose cost basis is below 10, now is actually a good time to start selling and then use this profit for either the long-term speculation or to just stick in and to see what's going to happen, and so on. So this is for the short-term speculative aspect of Lucid. The other thing is that recently there has been an article saying that, people shouldn't just buy Lucid just because the recent volatility picked up. But if we look at the fundamentals, things can be worrisome. I'm probably going to address this later as well, but for now, let's just say that the worries are that the world economy is not doing as well as it should be, or as it could be, or as it used to be. And even for behemoth like Tesla, they're cutting back on production, they're cutting back on forecasts, they're cutting back on the volume of cars to be sold, and they're also cutting back their costs, or rather their prices, and indirectly the cost, obviously. So my point is, the fundamental macroeconomic situation is not necessarily improving, and we might be in for a couple of years. This is why, this analyst was saying, well, right now is not the best time to buy because of the fundamental risks. Now, I agree with the fact that the fundamentals are not very favorable for Lucid, and in fact, it's not very favorable for any sort of company with an exposure to the real world. And with that being said, I think that he also misses the point that right now the name of the game is not necessarily which company has the best fundamentals, but where can the speculation go? I think that de facto we should be looking at whether we are surfing on the speculation and whether we are surfing on the right side of the speculation. In other words, are more people going to pile in for Lucid at this current price point? knowing that there is a buyout option looming, that it can potentially happen, what should we do? Because right now, the scope of the operation, the outlook of the operation is no longer just, the long-term game. I think that if we were in normal circumstances, like I'm going to talk about it later, but you know how Lucid is mostly owned by institutional shareholders. Well, this usually means that if you get in for the long run. You don't come in and go out in a matter of weeks. However, from a purely short-term perspective, I would say that now is actually a pretty good time to buy Lucid in the anticipation that something is going to happen to it in the short term. Of course, if you hold this opinion, then now is a good time to buy. For most people, that is. And I'll tell you a little secret. I no longer intend to buy in the current period just because my capital has been deployed elsewhere already. I don't necessarily have anything against the idea of buying it now. I'm just saying that for me, it might not be the best timing. With that being said, if like the proposal doesn't pan out, if it doesn't go through, and then obviously the stock price takes a nosedive, then I may actually start thinking about like purchasing more Lucid shares. And my reasoning is actually quite simple. If we think about it, going in, my strong belief, my strong assumption here is that Lucid is going to have an actual future. Okay, so no matter what we say about the short-term speculations and volatilities and the buyouts and so on and so forth, if it were to continue its operations and continue to be listed on the open market, then 5 to 8 years from now, it's going to have a brilliant future. That is my assumption. I understand that the current fundamentals might be challenging, but I don't believe, I sincerely don't believe that this is going to have an impact in the long run. Do you guys remember the latest hot topic in the stock market 10 years ago? Yeah, me neither. So this is why I would say that we need to start thinking about positioning ourselves regardless of the outcome. Meaning, if it's outcome 1, I'm going to do this. If it's outcome 2, I'm going to do that. And we're going to talk more about my recommendation of how many shares you should buy a bit later. Lucid Motors, also known as Lucid Group, is an EV manufacturer that is poised to shake up the industry with its cutting-edge technology and designs. While other EV manufacturers have been making strides in the industry, Lucid stands out with its advanced battery technology, the dynamic designs, and the commitment for a sustainable business model. One of the key differences of Lucid Motors is the battery technology. It is known for significantly longer range and faster charging times compared to the competitors. Its car, Lucid Air, is capable of traveling over 500 miles on a single charge and charged to 20% in just 4 minutes. This sets the company apart from the competitors like Tesla. Another differentiator for Lucid Motors is the aerodynamic designs. The company's first vehicle, Lucid Air, features a very sleek and nice design that not only looks stunning, but also helps to improve the airflow and the efficiency of its energy. Lucid Motors also incorporates lightweight materials like carbon fiber into the vehicle to further improve the efficiency and the range. This attention on detail sets the company apart from other companies who may prioritize function or economies over form. In addition to the advanced technology and design, Lucid is committed to sustainable business model. The company uses renewable energy sources to power its production facilities, and it's committed to reduce its environmental impact throughout the entire life cycle of the vehicles. This commitment sets the company apart as well. There is also another aspect that I would say is what separates Lucid from the other ones but is now more blurry, which is its focus on luxury. The company's first vehicle, Lucid Air, is a luxury vehicle sedan boasting a spacious and comfortable interior, advanced driver's assistance systems, and a host of other luxury features. This focus of luxury sets Lucid apart from other companies which may prioritize affordability over the premium features. If we look at the company's long-term tendencies, it's not hard to see that the bubble that gave so much hope to traders around the world has now bursted. The market is no longer willing to blindly follow the latest hype, and sometimes I would say that it's also because it cannot continue this bubble forever. I mean, the industry is facing some significant headwinds coming its way, and at some point, the PowerPoints are no longer enough. We have to see profits. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a very rough patch for a few years. The market peaked twice in the past, and if the first peak was caused by pure hype, the second one was triggered by the rollout of actual products. Lucid remains a company that, as an investment, has a lot of value. The main question in everyone's mind is when should they enter in the stock? The long grind to lower price levels is likely caused by the market trends rather than the company's fundamentals. So in that sense, things are not as alarming as they may seem. On the other hand, we should remember that sometimes, even if those grinds don't have an actual fundamental reason, they can still last a very long time, bringing the title to an unbelievably low price. Hyliion and PaySafe would be good examples of this. Lucid Group, an electric vehicle manufacturer, has a strong financial performance in 2022. The company reported revenues of around $200 million for Q3 of 2022, a significant increase from the $232,000 in Q3 of 2021. This has mainly been caused by the launch of Lucid Air, the company's first vehicle, which began deliveries in late 2021. Lucid Air is a luxury electric sedan that has been well received by consumers and that has helped to establish the company as a massive major player in the industry. Currently, Lucid has a negative net income caused by the fixed costs and other operating expenses that should be absorbed once the volume picks up. Overall, the company's financial figures paint a picture of a company that is growing its operations but lacks a little bit in discipline of cost control and needs to scale up the operations to start having positive cash flows. Now, let's also talk about the shareholder composition, because it is something that's quite important to determine if the company is good for trading or investing. Given that 72% of the total float is owned by the institutions, this would mean that the price volatility should be lower than most other stocks. The reason why this might be the case is because institutional shareholders have far more diversified portfolios and they can tolerate the short-term volatilities. Another behavioral difference is that institutional shareholders tend to be more active and involved in the corporate governance. They're more likely to vote on important matters like mergers and acquisitions. They also tend to be more vocal in expressing their opinions on companies' directions and performances. Retails, on the other hand, tend to be far less active. They may not get involved, they may not vote, they may not be informed of important decisions to begin with. They just hope that they can yield a profit from owning a share. The short interest in Lucid has been increasing in recent weeks, meaning that more and more investors are betting against the company's stock by short selling it. The short sellers borrow shares of the stock and then sell them in the market, hoping to buy them back at a lower price later and to return them to the lender, profiting from the difference. As of most recent data, the short interest represents about 7.5% of the total shares outstanding. This is a moderate level of short interest. It's also worth noting that it has been increasing in recent weeks, and this can be a bearish sentiment amongst investors. Now, if the company has been reporting strong outlooks and results, this could lead to a short squeeze. I mean, things are not really that clear-cut in the real world, but generally speaking, people would come in if the fundamentals are good. If more people buy, then the shorts would have losses. The more losses there are, the more compelled the people short positions want to recover. It's important to note that the short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen, regardless of how many stars are being aligned. So my recommendation for Lucid is that if you don't hold a position, it's better to have a small position now to benefit from the premium. But I also want to say the benefit from not having to worry about FOMO. You know, like you don't have to worry about missing out on anything because you're not missing out. You're just controlling the exposure at which you won't be missing out, right? The other thing is if you already have a position, then you can just choose to wait and see what's going to happen. You can just benefit from the premium and then exit from the whole affair. On the other hand, this is like for the scenario that the purchase, the buyout will go through. Now, if it doesn't go through, then personally, I would still recommend to buy, but over a longer period of time, over like 6 months or something like this, and to stick with it for the years to come, at least 3 to 5 years, maybe even longer. And with that in mind, I would say that the total exposure for the short-term play should be around 2% of your portfolio and should be bought over the next week or so, okay, in the anticipation that something is going to happen between the PIF and Lucid. And if you're in for the long term, like the long run, if the buyout doesn't go through, then I would say that the exposure should be between 3 to 5% of your portfolio.